Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is Thursday, February 8th, the last one of the week. Don't forget to tune in on Sunday morning where we'll do our portfolio update. And today we are going to take a look at one out of the industrial sector. We're going to look at Snap-on. They sell tools. That's what they do. You may have some of their tools in your garage or workbench or car if you keep tools in your car. I don't know that a lot of people do that anymore, but I used to back in the day. And if you are new to the channel or have not done so, go ahead and hit that thumbs up down below if you find value in the content. Hit the subscribe button. Join us on this journey to financial freedom. Hopefully you're on your own journey as well. Join the Vested Interest community and hit that notification bell so you're notified whenever we put out any new content like this. We do videos like this Stock Pick of the Day series videos Monday through Thursday every week when the market is open. We take a look at a company that has pulled back on the day and see if it's presenting any value. We cover dividend growth investing on this channel. So if you are a dividend growth investor, and again, if you have not done so, hit that subscribe button down below. Help us grow the channel and get the word out. This is the Vested Interest Stock Screener. This is how I set up the videos. It's also how I look at companies on a high level to see if I'm interested in investing. If they meet 5 of 8, I throw in price to book for financial companies, or 6 of 9. In that case, they go on my watch list for potential adding to my portfolio. If they are already in my portfolio, this is a way to back check they are still meeting the criteria I have set up. Now let's get back to Snap-on. If you want to know more about this company, check them out, www.snapon.com. That's www.snapon.com. That is their homepage where I pulled this information from. In 1920, a cultural shift was underway in the United States as the automobile was rising in popularity, creating the need for an emerging automated repair industry. Joseph Johnson, an engineer from Milwaukee, had an idea that would revolutionize repair and make work easier for professional mechanics. 5 unique handles and 10 sockets that snapped on interchangeably, coined 5 to do the work of 50, launched a company that would shape an industry. And this is it. This is the original ratchet attachment that they created, along with the 5 unique handles and the 10 sockets. So that is the one that hooked on interchangeably to all the different tools. And then here's some of the brands underneath their name: Blackhawk, Blue Point, Carolina, Cartech, ATI Tools, Auto Crib, Auto HC, Baco, Sue, Snap-on obviously is the main one that you're probably aware of. There are others. These are just a few that I pulled down. Again, if you want to know more about this company, www.snapon.com, and that's what they do. They are a manufacturer and supplier of tools. The reason we are taking a look at them, down 9.67% on the day, huge drop on the day. We are talking about Snap-on Incorporated, ticker SNA, out of the industrial sector. Closed out the day at $266.03. You can see that big drop here, right? Pretty much just a drop throughout the day. Just a nice steady slide down the hill here. 52-week range as low as $226.68, as high as $297.26. They are closer to their 52-week high than their 52-week low, even after a 9% drop on the day. Average volume 213,000. Today's was 700,000. A lot of people just bailing on this one. Beta of 1, so they are matching the model. They are matching the overall market at a 1. That is what beta tells you, what the market is. 1 being the market, anything under 1 being less volatile, anything over 1 being more volatile. Price to earning ratio on this one sitting at $14.45. Earnings per share, EPS, sitting at $18.41. You don't see it very often, but this is one of those times where the earnings per share is actually higher than the price to earnings. Not that that really says anything worth of note. It just is interesting, and it just doesn't happen very often. Earnings date was February 8th. Yes, that's right, today. So I expect something in their earnings date was not good. They either did not hit the metrics they were shooting for, or their forward guidance was lowered, or they maybe hit everything and people just bailed out because they didn't think that they were hit over as much as they should. I have not looked at the earnings date, but you should take a look at that if you are interested in this company. Find out what exactly went wrong for them in this earnings date, to create a 9% sell-off. Ex-dividend date, the last one was November 20th. They paid out on December, so you would be in line for the next dividend payout if you were to buy them now. And it does have a decent dividend yield. For dividends, $7.44 on the year. Divide by 4. We'll see that here in a little bit. They are a quarterly payer. Dividend yield of 2.53%. and a 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, of $276. So they see it going up a little bit from where it currently sits. Payout ratio is low at 35.2%. I like anything under 75%, so that's definitely in line with the metric I'm looking for there. Now we're going to look at dividend yield theory to see if this one is presenting any value. To do that, you'd go into statistics, you'd go down to dividends and splits. Look at their 5-year dividend yield average, 2.49%. You compare it to its current 2.53%. Over here, 2.53%. I know it says forward annual dividend yield, but it's the same as the current, same number. And since it is slightly higher, which it is, that speaks to a little bit of undervaluation on this one, though it does not present much of a margin of safety. I would want more of a pullback on this one, more of a margin of safety. This one is just too close to its 5-year average for me, but it is higher than the 5-year average. So again, according to dividend yield theory, it speaks to some slight undervaluation on this one, at least according to the dividend yield theory. Now you should get into the financials and check out the balance sheet, the income statement on this one. For our purposes, we are going to look at free cash flow. We want growing free cash flow over time, because if a company has free cash flow and it's growing, they typically grow their dividends along with it. That's what dividends are paid out of, free cash flow. A lot of other good information in the financial statement, balance sheet, the income statement. You can check out their debt to equity ratios, revenue, is it growing? What do their margins look like? Are they paying down debt? Do they have more assets than liabilities, that if they had to sell off assets, they could pay off all their liabilities and debt? All good information. Again, we're going to look at free cash flow going back to 2020, $943 million. A bit of a drop in 2021 in free cash flow, $896 million. 2022, even more of a drop, down to $591. Looks like so far 2023 numbers, I know we're in 2024, but they have not finalized 2023 yet, $971 million. So it looks like they've grown from 2020 overall to date. They are growing, even though they were a little up and down here in 2021 and 2022. Now, some of this drop, you can see here repurchase of capital shares, free cash flow on the bottom, repurchase of capital shares on the top. Some of this drop in 2020 you can account for. They increased their repurchase of their shares up to from 174 to 431, and then dropped that repurchase of shares back down in 2022. So this year is an outlier. Overall, it looks like growing free cash flow, except for 2022. Now, I always recommend more than one source so you can make sure the information you are getting is accurate and up to date. The other source I like is stockanalysis.com. You pick any sources that you like. The 5 analysts from stockanalysis.com that have taken a look at this, they call it a consensus buy, though it is on the edge of hold. So this would be strong sell, sell, hold, buy, strong buy, right? So it's right there on the edge of a hold and a buy. So you could go into stockanalysis.com's website, click on each one of these, and you'd be able to tell out of the 5 analysts how many are calling it a hold, how many are calling it a buy, a strong buy, a sell, or a strong sell. I would say there are probably a bunch in the hold and some in the sell, and maybe 1 or 2 in the buy range. So overall, they still are calling it a buy. They have a low estimate of $240, which would be a 9.7% decrease from where it currently sits, and that would be a much better buy-in price in my opinion. Average estimate of $306, which would be a 15.02% increase from where it currently sits. And if it happened to hit their high of $336, that would be a 26.3% increase. All the while, you could collect that 2.5% dividend yield, at least if you were to buy them now. Now, I like to get into statistics in stockanalysis.com and look at how efficiently the company is investing back into itself. And to do that, you look at return on equity, ROE, and return on invested capital, ROIC. I like 10% or better for both of these metrics. So this one, return on equity, is sitting at 21.3%, higher than the 10% I'm looking for. Return on invested capital sitting at 16.49%, higher than the 10% I'm looking for. I also like to look at earnings per share forecasted growth over the next 5 years. I like 5% or better. This is sitting at 5.47%, just over what I'm looking for there. And just throw in revenue growth. They are forecasting revenue growth to grow at 2.7%, which is good for a company this size. So really overall, pretty good metrics, except for the current price of the shares. I would like more of a pullback, towards their 52-week low, back towards this $240. I would probably be interested in, I'll be honest with you, I'm not really interested in this company, but if I was, gun to my head, what do you want to buy this at? It'd have to be under $240. We're going to look at the dividend payout here. They do have nice dividend growth, 14.29%. Now they are saying 40%. Stockanalysis.com is telling us 40%. I think it was 37% if I remember correctly from Yahoo Finance. Anything under 75% is what I'm looking for. So this one is well under 50% very good payout ratio, low payout ratio, lots of room to increase that payout ratio, continue to pay down debt, repurchase shares, reinvest in itself, make acquisitions, all the things companies do with free cash flow, including paying out the dividend. Either way, the dividend is more than covered here. They are a quarterly payer, currently paying $1.86. They pay out in the March, June, September, December timeframe. And let's jump back here in time to November 19th, 2020. They were paying $1.23. November 18th, 2021, up to $1.42. November 18th, 2022, up to $1.62. And yes, again, November 2023, up to $1.86, most recent increase. So I would expect here in 2024, if they're going to keep this dividend growth alive, it will be in November. Well, that is really it for this one. Let me know what you think in the comment section down below. Is Snap-on in your portfolio? Are they tools that you have in your garage or in your toolbox or your workbench? Also, are you looking to invest in the company? And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Hopefully, you're on your own journey as well. Join the vested interest community. We are a community of dividend growth investors. That's what we focus on this channel. Dividend stocks in particular. Though some of my viewers I know are invested in growth stocks as well. I really just want you to be investing in the market. ETFs are a fine investment way to go. I do a lot of my investing in individual stocks, but I do have some ETFs as well. Nothing wrong with those. If you want to avoid the time it takes to research companies, and you want to avoid the potential for your company to go out of business, put it in a basket stocks like VOO, VOO, VTI, the entire United States stock market. VOO is the market everyone is trying to. The S&P 500 is the market everyone is trying to beat. When you hear people talk about the market, usually they're talking about the S&P 500. Well, again, that's it for this one. One last tidbit. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Snap-on you'd like me to do a stock pick of the day video on and do a quick review, go ahead and drop it down in the comment section and I'll take a look at it. I focus on dividend growth investing. I've been getting some requests for companies that are not dividend stocks. I just won't review those. I'm not interested in reviewing them. That's not what this channel is about. You'll need to go to another channel for, companies that don't pay dividends. That's just not what I'm going to review here. So apologies for that. If that's not your thing, no biggie. There are other channels out on YouTube for you to go to. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you had a great week, and we'll see you in the next one. Don't forget to tune back in on Sunday morning. We'll show you what we added to my portfolio this week, any options we were in, any dividends we were paid out. Well, I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. If investing involves risk, you can't do money. You should never invest any amount. Not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select credit here, or seek the advice counsel of a certified financial advisor.